Have you ever wondered what a Bitcoin ETF is and what it could mean for the world of crypto? Let's delve into it. Bitcoin ETF is a term you might have heard being thrown around in financial circles. ETF stands for Exchange Traded Fund. So when you hear about a Bitcoin ETF, it's referring to a fund that trades on an exchange just like any other ETF, but with a twist. This particular ETF tracks the price of Bitcoin. Now this is where it gets interesting. Instead of going through the hassle of buying Bitcoin directly, investors can simply buy shares in a Bitcoin ETF. This way, they're indirectly investing in Bitcoin without having to deal with the complexities of handling a cryptocurrency. In essence, a Bitcoin ETF brings the wild world of Bitcoin into the more familiar territory of traditional financial markets. So a Bitcoin ETF brings Bitcoin to the traditional financial markets. But what does this mean for the world of crypto? Understanding the potential benefits and drawbacks of Bitcoin ETFs is crucial to comprehend its impact on the crypto world. Starting with the benefits, Bitcoin ETFs bring with them increased liquidity. By pooling together the resources of many investors, ETFs allow for the trading of assets that might otherwise be difficult to buy or sell in large quantities. This increased liquidity can lead to more stable prices and lower transaction costs. Another advantage is accessibility. Bitcoin ETFs allow investors who might be uncomfortable purchasing Bitcoin directly to invest indirectly through their brokerage accounts. This opens the door to a whole new group of investors who might have been previously put off by the complexities and risks associated with buying, storing, and securing cryptocurrencies. Moreover, Bitcoin ETFs are subject to the same regulatory oversight as other exchange-traded products. This means they must comply with the same transparency, reporting, and accountability standards as other financial products. This level of regulatory oversight can provide a degree of comfort and security to investors wary of the Wild West nature of the crypto world. Now let's shift gears and consider some potential drawbacks. One concern is the risk of price manipulation. Because Bitcoin ETFs track the price of Bitcoin, they are susceptible to the same price manipulation tactics that have been a concern in the unregulated crypto markets. Another potential drawback is the disconnect between the ETF and the actual ownership of Bitcoin. When you buy a Bitcoin ETF, you're not actually buying Bitcoin itself. Instead, you're buying shares in a fund that owns Bitcoin. This means that you don't have control over the private keys and you can't use your investment to make Bitcoin transactions. In addition, while Bitcoin ETFs may bring more mainstream investors into the crypto world, they also might draw investment away from other cryptocurrencies. This could potentially limit the growth and development of the broader crypto ecosystem. While these benefits and drawbacks are significant, the introduction of Bitcoin ETFs is a clear sign of the growing mainstream acceptance of cryptocurrencies. Given the buzz around Bitcoin ETFs, one might wonder, will we see an Ethereum ETF or other crypto ETFs anytime soon? When we talk about the future of crypto ETFs, it's not just about Bitcoin. The potential for other cryptocurrencies to follow in the steps of Bitcoin is real and growing. Just imagine Ethereum, Ripple, or even Dogecoin having their own ETFs. First, let's consider the factors that could influence this possibility. Regulatory approval plays a crucial role. As we've seen with Bitcoin ETFs, regulators are cautious. They're considering factors like market manipulation, investor protection, and the overall stability of the crypto market. It's a tightrope, balancing the need for innovation with the need for regulation. But as Bitcoin ETFs pave the way, it's likely that regulators will become more comfortable with the idea of ETFs for other cryptocurrencies. Next, there's the question of market demand. Cryptocurrencies in general are gaining traction. More and more people are becoming aware of them, and their potential for high returns is attracting investors. This increased interest could well translate into demand for more crypto ETFs. But what does this mean for the crypto world? Well, the introduction of more crypto ETFs could lead to greater liquidity. This means more trading, more volatility, and potentially more opportunities for profit. However, it's not all sunshine and rainbows. With increased integration into traditional finance comes increased scrutiny. Greater regulatory oversight could lead to restrictions that some crypto enthusiasts might not appreciate. And let's not forget the risk factor. The crypto market is notoriously volatile, and while that can mean high rewards, it also means high risks. In conclusion, the future of crypto ETFs is a fascinating topic. It's a blend of potential and uncertainty, of opportunity and risk. And while we can't predict the future, we can certainly say this: the introduction of more crypto ETFs could further blur the line between traditional finance and the crypto world, bringing with it both opportunities and challenges. So there you have it. Bitcoin ETFs in a nutshell, and the potential implications for the world of crypto. We've journeyed through the concept of Bitcoin ETFs, exploring what they are, essentially a way for you to invest in Bitcoin without actually owning any of the digital currency. We've weighed the benefits, from increased market liquidity to enhanced investor protection against the drawbacks, such as the potential for market manipulation. We've also peered into the crystal ball of the future, speculating on the possibility of other crypto ETFs, like those for Ethereum. This could open up new opportunities for investors and further legitimize the crypto market. As the world of crypto continues to evolve, it's important to stay informed and ahead of the curve. If you found this video informative and want to keep up with the latest on crypto, don't forget to like this video, subscribe to our channel, and leave your thoughts in the comments below. Until next time.